Hi, welcome to this video date. It's the 18th of November. It's Saturday. We're going to be looking at a couple of pairs today. We're going to the charts at the moment. They're going to be Euro JPY and USD JPY. And we looked at them last week. We also looked at the AUD JPY. I'm going to cover that in a different video. But last week we were saying we were just getting out and out yen bullish. The market consensus on the yen, just too bearish for us. We expected the yen to strengthen. Now, it has strengthened a little bit since we did the last videos. In terms of AUD JPY from our suggested entry, it's up about 230 pips. USD JPY and Euro JPY about 250 pips between the two pairs. And a few people have written to me and said, that's a decent profit. When are you going to take it? I'm not going to take it just yet. I want to run the profit if I can. Obviously the market can spring back on me, but you've got to have, and I've stressed this in other videos, you've got to have a good profit on your profitable trades to cover your inevitable losses. Okay, over the last few weeks, trading conditions have been absolutely fantastic, but we know they go from being really good to those periods when we're in drawdown and taking losses. Just want to go through how much profit you should aim for on your trades at the end of this video. Right, now in terms of what we're going to be doing today, it's going to be simple technical analysis for new viewers, and what we're going to do to back up our technical analysis is to use our favourite tool in Forex trading, the COT, the CFTC Net Traders Positions. If you don't know what it is, you can join our mailing list beneath this video and learn more about it. It's a fantastic tool. It helps us get all our big profitable trades. Okay, we always look at it before we trade. So you can learn more about that. But if you just want to watch the video through right now, just keep in mind what we want to do is when smart money commercial hedgers move aggressively against large speculators in terms of their positions, we want to trade with smart money commercials. Commercials this week just heavily bullish the yen. Right, let's take a look at USD JPY first of all, and I'm going to start with the net traders position. We are just first of all on the COT data, see what the commercials and large speculators are doing. And in terms of COT data, for new viewers, it's foreign currency first. Obviously, we'll be trading USD JPY, so we'll be reversing the chart around in a moment when we draw our levels. Now, here what we've got is the two important groups: commercials, the smart money hedgers, and the large speculative funds. Okay. Now, last week we noted this divergence here. What we want is the two groups to diverge heavily against each other. They do it at 150,000 contracts. Look what happens. We move up from around 87.80 up to 93, where we peak out. Now, that is a decent move, We've got, what, 500 plus pips, okay, on that move, on that divergence. We noted last week divergence had crept up above 150,000, okay, and we're looking for it to break in favour of the commercials heavily long the yen, and we know they're going to be continuing to buy. Once they start buying like this, they don't tend to stop. You can actually look back on the report historically. Now, what we have, obviously, the large speculators heavily short, they're starting to get run on stop. Okay, it's not a big move yet, but it's going to be a big move in my view. We are going up. You've got, I drew a line up here at 92.50. We're going far higher in terms of the yen. USD JPY is going to get hit hard, okay, in my view. Let's now go to the chart, reverse it round, and draw some levels of entry, stop, chart the right way round now. It's obviously USD JPY. Now, just for new viewers, I'm just going to go quickly through how we've been playing this trade. Now, in terms of over here, that is the previous big COT divergence, okay? Sorry, I spelled speculators wrong. But they were buying heavily here as the commercials went against them. And then we get a nice move to the downside as the commercials come out on top, and it's a decent move, 114.50, okay, down really to around 108, so that's 650 pips, okay. I don't see why we can't do the same again, okay. Now, in terms of down here, and we start to move back up, the news turns basically bullish for the dollar, get a little bit of correction, specs then want to buy the dip, we go through the 20, hold it, push off it, and we're going to try and take out this candle tail. And you can see the bulls here getting exhausted. They're having pokes up at it at the level. Come back, find support at the 20, another push. And there is the significant candle for us, as I was saying last week. That is just speculative buying, exhausting itself. There's obviously going to be some buy orders above this level, okay? There's not enough of them. We come back. Now, because we've got such a big COT extreme, from our perspective, we don't need much confirmation to go short. We're going to come straight in through the 114 level. We're going to come in at 113.80 was our level in the member center. Okay. And as soon as we've taken out 114, we just don't think that, we're going to get back above that level. We've got body there, body beneath, hammer, or whatever they call them, poke to the level. We just see it as exhausted. We're in. And when we did come in, actually, we left our stop back behind 115. We can give it plenty of room. We've got big divergence. You could have a go at that tail again. We didn't think so. But we want a basic, we want a stop that's wide enough that we're not going to get clipped out, okay? Well, obviously, we brought it down now. Now, what happens is drift back to the 20 here. We don't think it's going to hold. Regular years, no, we find the 20-day moving average really, really useful in terms of holding in a bull trend or a bear trend. Basically, it's a level of support or resistance. We just don't think it's going to act as support. Doesn't, we come down, half-hearted attempt to get back up. And then this candle's a little bit bigger than the previous ones, obviously, coming off that exhaustion tail. For me, that candle there looks like the speculative stops are going to get run, okay? You can see from a trajectory point of view, the odds there for me are just becoming bearish, prices have distributed, okay? I mentioned distribution last week. If you don't know Dow theory, I'd strongly recommend you look it up. It's the greatest technical theory ever, in my view. But, prices travel sideways. The volatility drops a bit. The prices are distributing. And now we're starting to move to the downside. Now, I personally now do not think that we can take out 113.50. So, in terms of the stop, I would have it back behind that level, okay? Now, would you come in right now? Well, you could. You could wait for the bounce to 113, okay? This candle body top here, that candle body top there, I'd say about 112.70, 112.80. That would be a good level to get in at. What happens if she doesn't bounce? I just take the breakout lower. Now, I said last week that pure technicians, will find this level here significant. I just don't think it is. Why? Because we know there's still a lot of speculators long, okay? And there's a lot of stops to be hit. So I think if we come through 112, take it out decisively, let's say 111.70 through this level, we will be going down to the major level for me, which is going to be here. So 111 should be the first port of call, with more stops to roll, okay? But this COT divergence is such a nice one. I think we're going lower. And my target, in the short term, I've got a bigger, longer term target. Sorry, I can't draw my line straight. Is down here. So down towards the 109 level, where we'll have that little bit of a base jump and then exhaustion. So from current levels, I still think, 300 pips is on the cards. Any bounce from me is a sell. I would take her on breakout slower or little pops the upside back towards that 113 round number. Keep that stop back. behind the 20-day moving average. So this one's going okay so far, 180 pips, but I'm just hoping we're going to get a lot more. And that target I put 109, that is really just a short-term target. I think we're going to be going all the way down to the par level. Right, what we're going to do now is shift and look at, what are we looking at next? Euro. Right, JPY. We're on the Euro Japanese Yen daily chart, and just before we draw some levels, let's take a look at the COT net traders positions. Now, in terms of the crosses, there is no data from the CFTC for the crosses. However, you can create it yourself, and what you do is just take the two major pairs that make up the cross, Euro USD and USD JPY, see what the groups have got in each pair, and then you got the cross. Now, in terms of the speculators, they're 5.5 to 1 in terms of their longs over their shorts. Okay, so bullish of the euro. Commercials oppose them 6.2 to 1 in terms of shorts over long, so bearish. Divergence between the two groups 11.7. Now, each week we will do 30 pairs and analyze them. And divergence is above 10, really interest us, because you're normally going to get a break in favor of the commercials. Also, we like to look at historical divergence, because different pairs have different divergences, and historically this is a big one, so it's very interesting for us. Now, when we were down here, down here, we move up, try and take out this double top here. Speculators buying heavily, commercials are against them. The COT divergence moves above 10. So we want to hit her short. So we're just going to hit her through the round number, the 134 level. We go down nicely, okay? And we come back to the 20. I thought, 20 is going to hold. Then this looks like she's held because we get the spike above, still holding. I had the stop at entry when we got down here, and I get taken out at entry. Really frustrating when you give back profit, because we've given back like a good chunk there, okay? You actually have to, just make this point on the COT, you actually have to have realistic stops when you're trading with the COT. They're normally, at least 100 pips, probably 150 or something like that. And sometimes you will give back your profit, okay? It's frustrating. It's one of the most frustrating things in Forex. But with the COT, you're after bigger moves, okay? You're after those 300 pip moves, those 500 pip moves. So that's just part of the game. What I would say, regular viewers know this, we normally will run a few positions, so we've got the facility to take out half or a third when we reach a decent profit level, which is about 200 pips normally for us. Right, this candle up here, a big blue one, is when the COT data is compiled. It's compiled on a Tuesday, released on a Friday. And by looking at this report week after week, you know that the commercials are going to be selling against the specs here. And they were, okay? So again, we do not need much confirmation to come in. We don't think 134 can get run, so we'll sell any red. We've come in at 113.80, okay? So, we're doing an early entry. Now, come down, sit on the 20. We don't think it's going to hold, and then she breaks down on Friday. Now, I personally think we are now going to see some decent downside. I think if you look, got a round number, that move above was effectively rejected, okay? So I think 133 should provide pretty decent resistance, okay? And the 20-day moving average is just sitting below the level as well. I don't see us closing above this double top here. It could, of course, but I just don't see it happening. But we shall see. Where we're going to target, if we go down, we're certainly going to target this level here, these tails. If we get below 132, I just don't think this level can hold, because there's too many speculative stops to be hit. So where would we aim for? You've got kind of minor resistance here, in my view. That isn't my target, though. My target is actually 128. Okay. if I can draw the line straight. So that's my initial target. So I think any bounce is a sell, or you can take on a break of the 132 level. You'll be using, obviously you have to see how this develops, but we're using around 150 pip stop on this one. Looking for good downside here. If we get through 132, it's another 400 pips, hopefully. Obviously, it's got to do it, but we shall see. Just feel there's a lot of stops to be run. So 128 is our initial target, and then we're going for this level, hopefully. Obviously, we'll see how we progress because things obviously change day to day. But I personally feel 125 in the longer term is achievable on downside. Why? I've noted it here. ECB stimulus cut rumour, euro turns up. ECB hadn't even said they were going to reduce stimulus. Market just assumes it because, the data got a little bit better. And then we move off quite nicely up to here. Okay, that's a big move. I personally think it could all be retraced because the Japanese, in my view, they are going to hint that they are going to be cutting stimulus. I mentioned this last week. Inflation's on the up, business conditions are improving. They cannot justify, like the ECB, having such a big stimulus program when the economy is improving. And Japan has got the biggest stimulus relative to GDP ever. Okay, it's a massive stimulus program. So if they get a little bit more optimistic about the future and just even hint that they might consider reducing stimulus, the yen is going to soar. And I think they're going to have to do it because Donald Trump, he was in Japan calling them a currency manipulator, which obviously the Japanese are. So they either do some optimistic noises about cutting stimulus, or they risk a trade war with the US. So, for me, the fundamentals for the yen are just turning really, really bullish. And we haven't had a move from risk off either. It's been risk on in this period. And yet, the yen hasn't really been selling off. Okay. So I take that as bullish as well. And also I'm going to do a few more videos over the next few days on yen positions, because when you look at that COT net traders report, the commercials aren't just bullish the yen on the USD and euro, they're just bullish everywhere. Obviously, we're heavily bullish as well. I'm sure you probably guessed that already. Right, that is my review of Euro JPY. We'll see how this one pans out. Right or wrong, I think she's a decent risk to reward trade. We'll obviously update this one in future videos. I'll come back off that short analysis there of USD JPY and Euro JPY. That's my view as of right now. It can, of course, change in line with the market conditions. If you want live access to our techniques and our trading analysis, you can click on the link beneath this video. Now, in terms of, actually, I forgot to say, when I was doing the Euro JPY chart, just noticed that I said that 113.80, it should have been 133.80. I'm sure you gathered that. Now, in terms of those trades, they're running nicely, and we're looking for more profit. Okay, a lot of traders look for too little profit on their trades, in my view. If you look for too little profit and don't take a realistic risk, okay, to stop, then you'll never make money. I saw someone doing a video on YouTube the other day saying, it's good to take 20 or 30 pip profits. No, it's not. How can it be? You've got to have a realistic profit to cover your stop loss. And all you got to do, if you're new to Forex trade, just look at the volatility. We've had relatively low volatility in recent months, but a lot of currency pairs are moving by 100 pips in a day. So, to get your stop outside of the noise, it's normally going to have to be at least 100 pips. Now, if you are basically, let's say, winning half your trades, how much profit should you be aiming for? Well, from our perspective, obviously, we're trying to get big profitable trades. We don't always get them. We're aiming for 300 or 500 pips. Obviously, we're happy with less, but never really go for less than 150 pips profit on a trade. It's just not worth it in terms of expected payouts. If you don't know what expected payouts are and you're trading Forex, go and look it up, because you need to understand expected payouts and probability, okay? There's no probability on your side if you're going for 20 or 30 pips. And the people who actually say it's possible, okay, I know I stress this in a lot of my videos, you never see their trades. It isn't possible, okay? So aim for a realistic, profit objective. Now, in terms of, having an open profit, a nice one. Those are nice profits in terms of the pairs we just looked at. You've got to have the conviction to hold for a bigger profit, in my view, if you really want to make decent money trading Forex. And that's where the COT is just such a fantastic tool, because you see the chart totally differently when you know what those two big groups that we looked at, obviously speculators and commercials, are doing in terms of their positions. You can't just look at the chart and expect a stop run. The chart doesn't tell you that, okay? You need the COT or some way of measuring sentiment to give you that warning, okay? COT is giving us that warning. I'm not saying it's going to come off, but in my view, probability is on our side. And I think if you're new to Forex trading, do not, and I know I've stressed this in numerous videos, do not go for all this short-term trading. Draw too many lines on your chart through meaningless levels. Look for the big support and resistance levels and use a sentiment tool like the COT to back you up. Now, anyone can learn to use the COT. And if you think about it, it's free. I mean, how much would I pay for it? I've said it in other videos, thousands. They're not going to charge for it, but it'd be worth that to me, just simply because it gives you such a deep insight into where prices could go, and also it gives you the confidence to hold big profitable trades, not just to cover your losers, but to give you longer term good growth on your trading account. Right, that is the video for today. I hope you enjoyed it. Take care and have a good day.